The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on the 17th day of March. My pleasure to be here, Monday through Friday, except I won't be here tomorrow. And as it stands right now, of course, we had some great programming right through from 8 o'clock this morning, and that'll continue right through the day. Don't forget your swimming lesson, and don't forget, you've also got Dave White, you've got Steve Rose, Dave White, you've got Tom O'Brien, you've got Andy Hecht. Thursday's the day. So the Dow's up 65 at 79,391, just taken out yesterday's high. Now, I'll talk about that in a moment. Let me just give you the numbers so that I can get them out the way. The Dow is up 65 at 17,391. The S&P is up 2,000 at 2,031, up 438. The S&P is lagging quite a bit. It lagged earlier this morning. The DAX was down sharply. The E-minis were up very sharply. The E-minis this morning hit 27.27 and then cascaded down to the 20, I think it was 6 something, 205.75 level. And now they're back at 2022. Real nice rebound. So we're watching this closely because of a number of factors, which I'll talk about momentarily. Let's just run these numbers through. You've got the comp index down 7 at 47.58. Now, what's fascinating is that gold at this particular point is up 37 at 12.67. This is a little confusing when you look at it because a great deal of the move was made yesterday overlapping into midnight. So I think that's included here. But certainly gold has had a fabulous move because the GLD is at 121.10, up 52 cents. Now, what we're looking at is within the context of the market, silver's had a very big move. It's up 81 cents at 16.035. Platinum's up 15 at 992. High-grade copper is at 227, up 440. And crude oil is up at 39.81. Look at this chart. Let me show you for a second the relationship. I found this just recently. It's something I put on ages ago. Just forgot all about it. Was the SPY and in this particular instance, the USO, United States Oil Fund. Look how nicely they move together. Not always, and not always in the same proportion, but directionally. Very often, directionally, they're going to be in the same mode. But most importantly, every once in a while, when one of them crosses, as it did right here, you start to get a reversal. And the green line is the SPY, and the red line is the oil. So we'll see. We just had a little reversal right there. There's a cluster formation, and we'll see what happens from here. A couple of things going on. Let's just get out of this because we want to get back to our charts. And you'll see that within the context of the market having moved down earlier, bonds are up. The TLT is up 82 cents at 129.08, and the June bonds are at 162 and 28 seconds, up 112, and the dollar, this is going to be interesting. Let me just move this across here so that I can see it. The dollar, whoops, I can't get it. So let me do it on the chart itself. DXY, the dollar, DXY is sharply lower, minus 1.01 at 94.88. There's that arch formation. And the dollar at one point looked like it was trying to tackle the higher level of the higher 98s, in a 98.58, then it came down in an inverted. Let me just see. I'm going to draw this in for you to show you one of the techniques that I love to use. I thought I had drawn this in already. Probably not, because it's not there. So yeah, let's do it right now. New parallel, make that red or pink and dash so you can see exactly what's going on. Boom. And I love when there's a midpoint line, and that midpoint line is in fact right there. The midpoint line is what I call the plumb line between the arch or the inverted the cup formation or the inverted V or the V pattern. So this is very important because the dollar's broken down. Remember I said that, was it yesterday? Time flies. Yeah, yesterday I think I said I believe that the Fed would rather be going for a lower dollar than messing around too much with the interest rates. That's kind of what we've got. And what was interesting, remember I said that the TU, I'm sure I spoke about it because I know I did the work. Maybe it was during one of the breaks. No, I did. I said the TU's made a leg F to the downside. That could turn into a trough F. And the TU is the 2-year United States Treasury note. And it went from the 109.20s right down to yesterday's low of 108. Is that a 20? 108. Yeah. 108 and 23 ticks. And that's very important because they had a very big spike and then it's starting to pull back again. So the TLT right now is saying, ho-hum, interest rates are really not the issue right now. Keep your eye on the dollar because the dollar is going to help the golds move higher. Now, I want to do this real quickly before we do anything else because I think I started doing it yesterday. I can't even remember if I did it because I did 2 shows. I did Steve's as well. So the GE, yesterday was just neutral. Today it's looking fabulous. Oh my goodness. Now it's even more than fabulous because it's gone to leg D. And it's gone to that leg D with the MACD just deflecting higher and the stochastic still at 83%. So that's a very good sign. It's a very good sign for the market because it's confirmation of the move right now. So it's leg B, gray B in the weekly chart. Wow, that's a very interesting V-shaped recovery pattern because sometimes what these patterns do, let me show you something that I found over the years. They make this pattern that looks like a heart. And then it starts another move to the upside. And overall, it becomes like a heart pattern, like an arch pattern, but it's made up of 2 inverted U-shaped patterns, or let's call it lowercase m. So I'm watching GE really closely. Why? Because GE has had a spectacular move from the low of 19.37. It's trading at 30.63. This monthly chart is really very positive. It's actually positive for the market. Now let me just talk about a couple of other things. You've got my Dow quartet. So GE has just gone to leg D. IBM has gone to leg, it's recycled, but this is still either an F or it's recycled to a new B. I was thinking F right there on the 200-period moving average. It usually says you might bounce a little bit, but you're going to come back and retest that moving average of 143.20s. And here it is at 146.96. Wait a minute, you've still got triple M in my Dow quartet, also in a potential leg F. But walking the 9-period moving average, making this fabulous W formation I've been talking about for ages. Wow, we missed such a beautiful entry on an option that I wanted, which is trading, I think, now at about 8. But I wanted to get it much lower in the ones, and we missed that. And then it took off. So that's one of those coulda, shoulda, woulda. And here's the other one, UTX. UTX is acting very nicely. It's within this framework. A lot of charts have this pattern, sharp move up, and then like a flagpole, and then the inside buy mode. This is now new leg C in the UTX chart. So this to me is really positive. It didn't look like it. And when we started to pull back this morning, I thought, wow, because we went short yesterday. And I don't know, we're still short, very close to being taken out on our position on the Dow. And it's a pity because I'll talk about that in a moment, and I'll tell you why.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let me just finish writing this in here. Broker dealer. All right, I'll fix that up. In the meantime, this is what we're looking at, folks. The Dow is up 88, S&P's up 678. The XBD I was asked about in an email, Arca Securities broker dealer made a peak F. That's why those Fs are so important. That's just, there's no question about it. The 6th highest peak. Now let's see, 73.33, 73.34. So this is the start over there. That's an A minus. Let me show you something. A minus, and then a restart right here. So the broker-dealer index has gone from 2012 low in the 77 area all the way to over $200, pulls back under 140, and now trading at 158.33. And the question is, DBGS charts still show a downtrend. Will the XBD lead the SPX lower into April? Okay, so let's just do this. I've got the move. There it is. You know, this is very interesting. In all other periods, except this very last period, as long as I can remember, when I was bullish on the market, I would buy Merrill or I would buy one of those brokers, and I would say, okay, market's going up. The layperson is going to be buying stocks, and invariably it helps the brokers. This is the first period that we've seen something that's just different. The XBD is still way more at the lower end than the higher end. Goldman Sachs, let me type it in here. Goldman Sachs, GS is the symbol, trading at 150.91, up 37 cents. Not a great looking chart. It just is not a good looking chart. And I think it's part of the pressure of what's going to happen politically. Are we going to be under pressure? It's saying us, the broker dealers, and the general financial instruments. Is something coming along like with IBD, which is trading at 242 now, down $7? Is this the way things are, that when you are politically attacked, Wall Street, this is part of Wall Street, Goldman Sachs, are we under pressure? The XLF is having quite a nice move here. It's up 11 cents at 22.47. But historically, when you look at this chart, the the banks should be much higher. The financials should be much higher. So maybe they've started a move. Maybe this is the move that's starting right now, but a lot's going to have to happen. So the answer is there's a split personality in this market. Look, even earlier on, the market was very weak, and yet the Dow started to come back. And when you look at the Dow, you say, "Well, how come that's happening?" Well, couple of things are going on here, and one is that within the Dow, let me just run it again. Look, GE, powerful move up, 45 cents up, 1.5%. IBM, who would have thought just a month or so ago that IBM would be a leader, going from the 116.90 level on the 11th of February to 146. Nice action. And that's the reason why, in a way, it was very silly, I guess. Instead of having the patience when I said that I would wait to buy a dip, I decided yesterday that with all these legs, E's and F's, and they can still turn out to be okay, but this is extended a little bit more than I was expecting. I wanted to have a dip into next Tuesday, and then we would go long. Now what I'm looking at is the move that we've just had. Is this really a breakout move in the, let me just go to the, let me show you something here. I'm going to go to the QQQ series. The QQQ series is down 33 cents. You see why I'm talking about a split personality market? There are a number of really strong, there were a number of very strong leadership stocks in the NASDAQ, and now they've kind of stalled. They're just backing and filling. They're taking their time in this consolidation. That's why I've said for a while the Dow is for me, one of the leading indicators, because it is the greatest mix. And that's the reason why it's held so well on every pullback. It's been one of the strongest stocks. Look at the NYA.X, the New York Stock Exchange. This is, again, here we are, leg F, or is this recycled to a new leg B? You would expect that in the weekly charts that we are getting to resist. Look at this, right on the resistance level in the New York Stock Exchange. And yet I'm looking at that monthly chart, and I discussed it over and over again. I said, if any of these indices start to close above the Roman candle of January, you have to just consider that that is a very positive aspect. So we're watching, this is the March candle, and it is way above the January high of 10,039 in the New York Stock Exchange. It's at 10,149, bumping into the monthly 9-period exponential moving average, bumping into, let me make this a different color. Let me make this, first of all, style. We're going to go dashed. Let me make it thicker. Let me make it that thick. And let me make it a different color, some kind of bold color that says, there you are. And that says right there, we're right at resistance. And we're at the 200-period exponential moving average. This is a very important moment. I mean, on the one side, I'm saying, I hope we don't get stopped out of our position. Let me just check it out. And that we did get stopped out of one position. We have another short that we implemented yesterday in a stock that's right in an area that should be the hot area, but I think is now slowing down because that hot area has a lot of servicing issues that goes with it. It's very complicated, and that's down about 4 points from where we entered yesterday. So it's a mixed market, and that's the reason why I think you have to stay with what's working, and you have to not be afraid to short what's not working. I think that's just the way we've got it. Now, I have a webinar coming up on this very aspect of how are we going to put all these pieces together. I'm going to be able to do this in some things quite easy. Let me just show you right here. This is the, oops, is that it? No, here it is. Oh, that should be it. There it is. The coming 3-month outlook in the market and which sectors could rally or fail. Basil Chapman will be hosting a 90-minute live webinar with subscribers to his opening call newsletter on March the 30th. Sign up now for a 30-day free trial to access this exclusive event. The coming 3-month outlook in the market. And one of the things I said this morning to subscribers is that assessing the political, the historical context of the match between the 1920s and now, the late 1920s, and now just a whole bunch of factors is going to be a lot easier than assessing where the market could go because of the factor that we've got a rotational market that's doing all sorts of things. And now we've got the commodities starting to move. Thank goodness we're quite heavily into the commodity market. And of course, it's been doing very, very well. And all I can say is that in this rotational aspect of the bull market from March of 2009, we've seen that every time certain sectors start to falter because they've run out of energy, like the NASDAQ top Nifty 15, let's say, then all of a sudden you get another sector that comes to life. And here we've got the commodity sector. So I'll be back and we'll be talking about certain stocks and answer some of your questions about some of the commodities when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman does up 94 at 17,418, and S&P's up 7. Playing catch-up now. It's still lagging percentage-wise, but it's at 2,034, and that's good. So I was email comes in and says, Caterpillar was down sharply earlier on, and now it's up. In fact, it's making a new recovery high. Now, this is exactly what I was talking about. Look, there's that peak E in the Chapman wave. It pulls back very sharply, goes under the 200-period moving average, tests the moving average, and then it has a bounce back. But at the same time, here's a pattern that says to me, whoa, be a little careful, because when you're making new recovery highs and you make that U-shaped pattern, very often you get some kind of a pullback because it's what I call the drop bucket pattern, and you got to watch it real closely. And if you're looking at the divergence between the different sectors, you've got to wonder, and you've got to say to yourself, what's going on here if the NASDAQ isn't leading, and the NASDAQ has not been leading for quite a while. We've had a rotation of the leadership, and that's the characteristic of a bull market, is that when corrections occur sideways because there's essentially a rotation from one sector to the other. So Caterpillar is actually, look at this weekly chart of Caterpillar. It's just about to break the very important high of 75.93 made the week of the 6th of November of last year. If it closes above that, then that's saying that Caterpillar has probably made a pretty decent low. 120-minute chart shows you leg D, probably peak D. We've got to be careful a little bit here. So we're going to go to Rich in Portland. Rich, hi, how are you?
Fine, Basil. Thanks for taking my call.
My pleasure.
Based on the action that you're seeing after the Fed and all of their so-called talk, I bought into the SPXL yesterday.
Very good.
Before
Congratulations.
the Fed announcement. So right now I'm looking at a little bit of a profit here, and I'm wondering, is this a place where you should bail out today?
Okay, so now I've had a couple of people send emails, and they come across, and one of them says SPX closed at 30-day high on FOMC day, plus if closes up today equals exhaustion for weakness next week. Should we sell out all the longs? You know what? Let me just cover this in the same breath as I'm talking to you about your position. One of the things that's going on here, for instance, in my newsletter, we have longs. We have one particular long that's a dividend long. I expected it to pull back today. It's actually up quite nicely today, so it's making a new recovery high. I've raised the stop a little bit, only a little bit, because the stocks that have been working in this particular environment are the ones that are probably going to just pull back briefly and then have a chance of getting back on track. So I'm saying, no, don't get out of all your, not the longs that are working for you. Now, if you're talking about trading positions, well, I would say that at this particular point, the MACD and the stochastic, I'm looking at your SPXL, is in fact, the MACD is very good. Stochastic is now back at 94%. That's really good. SPXL is 3 times long. It's called the direction daily S&P 500 bull, 3 times shares. Big long name, but it's just a 300%er, and it's acting very well. So this is what I'm going to do. I'm going to discuss it in 2 ways. I'm going to just quickly show you that on the other side of the coin, let me go to the TVIX, which is the trading vehicle we often use. The TVIX is at 551. It is the 2 times short-term long the volatility index, and it's down. It's down 28 cents at 552. We had a position there, and we were out of it now. And what I was looking at is whenever it's gotten into the fives, especially into the mid fives, that's been a tremendous opportunity to see the market testing whatever highs they're at, and then failing, and then pulling back quite sharply. Maybe this time it doesn't work, but I've got a left side, right side price time match going into tomorrow. A lot of things are pointing to this. If I look at the volatility index, the VIX.X, underneath, it's now underneath, it's at 14.06. And the last lows were 14.45, where a fabulous rally started. They went to 32 back on December the 24th. And the other time before that, it was at 1463. And it went all the way from 1463 on the 1st of December of last year to 2681. Time before that was October the 28th. That 24th was the low, but the 28th, the VIX made its low, went to 12.80 and then screamed up to 20.68. So the big question is this different in the concerted effort that it made? And it's still only in leg C to the downside. It's been such a vicious, since January started, there was a tremendous slide from 32 down to 19 and then right back up to 30. And ever since that February the 11th high at 30.90, this thing's just been going down, down, down. So when I look at the different the market areas, and I look at the Chapman wave and I look at the 200-period moving average, a lot of it says, and that's the reason why I said let's take a position here, but of course we're out of it now. The reason why I thought that this would be a turning point is that so many things were coming together. Now, I don't want to get in the way of your trade, so I'm going to suggest two things. First of all, at this particular point, the SPXL is up at 80.59, up 76 cents. If you have enough to be able to take a little bit off as part of money management, because after all, you got in yesterday and you've already seen probably about a point and a little bit gain, right?
Yes.
Okay. So in a volatile 3 times ETN or ETF, in this case an ETF, I would say to you, this might be the opportunity to take a little bit off and then just place a stop under maybe today's low. You can choose where. So if you don't want to give too much back, then I would make it halfway into the body of the candle, somewhere like $80, you could say. If it hits 80 or 79.98, you take off another portion of it. And you can say that's a portion I'm taking off. But because you're getting close to where the 200-period moving average and the 9-period moving average are getting closer together, that's where volatility starts to come in very often. There might be a little bit more room for the 9-period moving average to move higher. I don't want to get in the way of your trade because you're the one that did it perfectly. I did the exact opposite. Wrong. And there was a moment where we had a bit of a profit. We didn't take it, and now we're out of it. And we're not out of it, but we're close to being out of it. So I'm just going to say to you, because I made the mistake, I don't want to give you bad advice. And my advice is only to say, the 120-minute chart is still acting quite well. Let me just double check on the SPXL. I think I better look. Let me look at the SPY because I think I've notated that. Yeah, the SPY is in leg D to the upside. And this is the vehicle that you're basically trading. You just happen to have a 3 times whatever the SPY is. So it's saying to me, based on the technicals, that we're getting a little bit overbought in the 120-minute chart. The daily is in leg alternate count. It's gone to a leg D in the SPY. It's very interesting because I've got a leg F in the in this S&P. So you know what? Are you able to hold on a moment?
Yes. Yes.
You know what? I'd like you to hold on because I want you to think it through so that I can actually give you numbers rather than just saying this, I think this. I can give you the specific numbers then. So we'll be right back.
Greatly.
We'll be back with Rich in Portland, Oregon, and we're looking at the SPY. Basil Chapman. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. So I'm looking at the E-mini, the 10-minute E-mini, and there's a diagonal Chapman wave inside wedge diagonal that went to a left side, right side price time match, but it just missed getting there, and that was the 2027.25 high. It went to this last rally, went to 2025.75. So I'm looking at that and I'm saying, okay, this is a very important moment right now because there's short covering. There are a bunch of things that have gone on. The real market started at about, usually I say 10 past 10. Today I think it was a little later, maybe about during the beginning of my show. And now we're going to see what really goes on in the market. So this is what I was looking at. When I went to my, where I've got the Chapman wave notation, automated notation of resistance and support levels, 2027.28 is the E-mini resistance. Of course, it trades in quarter points. So let me go to the SPY because we're looking at the SPY as an example. And the SPY says 206.01 is the resistance, and today's high so far is 204.12. And it's got a bunch of resistance points, and it's kind of taken them out, and this is the last one. That is in the daily. In the 120-minute chart, it goes to 204.60, so we've almost been there, 203.83. So I'm seeing, and this is one of the reasons why I was looking at the market possibly having a lot of resistance over the last 2 days in the higher levels, because 203.58 is the level in the 120-minute chart as well in the SPY. So if there's going to be a breakout, and I have to say when my Dow Quartet acts this well, if GE acts this well, I have to respect that. So I'm going to just say to you, I'm going to go right back to your SPXL because that's exactly the vehicle that you're trading. So I'm going to say to you, the levels that I would be looking at, oops, let me get back here, SPXL. Here we go. Really nice move, up at 80.42 right now. So the more I looked at this, the more I decided that probably one of the things, just in terms of money management, I would either say you could take a little bit, if you have enough that you could keep a core, but you could take a little bit off now. I would say you could take it off now at 80.40, and if it goes higher, that's fine because you've still got your chunk that you've kept. But mostly you want to start the money management because the 120 minutes is just suggesting that maybe just on a very short-term basis, we're bumping into resistance, and you saw those levels I was speaking about. So here's my recommendation. You're in it. I'm sure that you thought it would be a trade, and you thought, I'm not going to give a time to it. I'm just going to give it a profit, because if I get a certain amount of a point or two or whatever it is, maybe it'll go on longer, but I have to first get that point gain, and that's really what you've got. Is that correct?
Yes, I've got a 2-point gain.
You see, if you've got a 2-point gain, I'm going to recommend that you can raise your stop then on just a portion of it to, I'd say 80, somewhere around 80, you can take a little bit off. Why? Because if this SPXL comes back to 79.70 by the end of the day, that would hint to me that there is a lot of resistance just about the areas that we've been looking at. But if it just takes off, if this is a breakout, because UTX now wants to climb and get to a new recovery high, GE is saying, hey, I'm just beginning my move up, then you'll be in the right position. So I'm going to say to you, take a little bit off either now or at about 80 or 80.20. But I would try to keep that core as long as possible so that if the SPXL by the end of the day closes, let me give you an exact number. 79.44 is the 9-period exponential moving average. So if this comes back and it starts to trade in the 79.60 area, you might want to take a little bit more off, and you still got your core position that if it backs, if tomorrow it suddenly moves up even higher, you're in it. But now you've already got yourself organized with money management saying, I've managed the trade very well. If it screams up from here, I'm in the trade, maybe not as much as I would have been, but at least I'm protecting my profit. I think that's the way to look at it. I hope that helps you, Rich.
Well, it does, because I don't want to get too greedy.
Well, it's not a matter, you see, this is very important. When you're in the right position, you're not being greedy, you're staying with the right position. So think of it that way. I don't like the term greedy. Greedy is when you've quadrupled to the upside and the profit isn't big enough, and now you've added another 50% to that. That's being greedy. This is just money management. I think you've done beautifully. You did exactly the right trade. Don't think of it as greedy. Think of it as more as money management, because you've got the right trend. If you're in the wrong trend, I'd say to you, hey, that's being stupid, but you're in the right trend. So don't let me put you off. You manage your trade, have a little bit of a trading stop on a little bit of a position, and then take off some if it comes back, as I say. And those are the levels that I'd be looking at. And you might even gap down tomorrow, but it's not a big deal because you've already taken off some of your profits, and that's the way to look at it.
Right.
Hope that helps you.
It does. Based on the trends that you're seeing in the market today, what is the TLT telling you?
Well, the TLT, in my newsletter, I'd say the TLT rallying like this should be an indication of market weakness. But actually what it's telling me is that there's, we've spoken for years about the TLT being a safe haven for many investors who get confused. But I think this has to do with what the Fed said, that they're not going to bump rates up. So money is drifting back into the TLT, yes, as a safety measure. But I can't put it into the category that it's rising and the market's falling. They're both moving together, and that happens sometimes. So I really can't give you an analysis that is so specific, because I'd only be guessing. And all I'm guessing right now is that there is some kind of a safety factor involved, but also the fact that people believe that rates are going to still slide a little bit more. That's what they're trying to capture, a little bit of gains in the TLT. Hope that helps you.
It does. Thank you very much, Basil.
Thank you for calling, Rich. I appreciate it. Let's go to Kevin in Sacramento. Kevin, hi.
Hey, Basil. How you doing?
Good. So I was upset because soon after we spoke, the IBB went just a tad high, and then plop, it collapsed.
It collapsed as soon as I sold a couple of my puts, because we talked on Friday about fixing that 262 area, and it was holding up well on Monday. And I thought, well, I'll just turn my put spread into a ratio spread. So as soon as I did that, of course, the prices collapsed. So I couldn't end up getting it put to me at 240. Do you see it going much below 240?
Well, this is very important. This is really important. So did you hold some puts, or you got out of everything?
Oh, I'm on a ratio. So I still own some 260s, but I sold some 250s that.
They would have been the best ones, right? Actually, no, the 260s are actually moving almost like 75 cents to a point right now, right?
No, I still have the 260s long, but I sold.
I
sold 250, so so I turned it into a ratio spread. So I'll end up getting the stock put to me below 240.
Okay, so here's the question. Your question is, will that go to 240? The way it's acting right, you remember what I had said before? If it does take out that left side low, then it should accelerate to the downside. That was the low of 262. 253.66. was the low of the 10th, and then 250-240. So there was an arch formation. So this arch formation is really important because it says that you could, if you break down, you could get a 1-to-1. Whoops, is that the time? Oh, we've still got another segment to go. That's good. So there's a 1-to-1 ratio, and it's expanded from the 1-to-1 ratio. You know what I'm going to do? Can you hold on?
Sure.
Because I do believe it's going to test that 240 area. Wow, they might just give you the stock, and then it'll have a balance. I'll be right back with Kevin, Dow's Up 93.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Wait for your swimming lesson coming up very soon. We're with Kevin in Sacramento, California, talk about the ocean. Must be pretty out there. So we're looking at the IBB. So what I've done is I've done an arch formation in the Chapman wave with, it's not even an exact plumb line, but it's the candle that I've chosen for the middle point. And it says that by the 21st, that's by Monday, the IBB could well be testing 240.03, the low. So is the price 240 that you're looking under? 240 it gets put to you?
Yes, by tomorrow. There's the tomorrow.
That's right. You've got until options expiration tomorrow. Your big question is, does it hit 240 tomorrow? Wow. With options expiration, they'll be going to the next strike price. I think the next strike price that is probably the 240 level. If it hits 240, it'll probably just dip a fraction underneath it, and then it's yours. But at that point, I don't know if you want to hold IBB. You remember what I said is that this is the kind of pattern that you look at and you say, hey, wait a minute. If it gets to the arch formation, can it make a second arch? And this is where it could start actually to bounce with the pressure, the selling pressure. It could have a relief rally and bounce from the 239 area to the 245, 247 area quite quickly. Would you be prepared for that?
I would love. Actually, if you can make that happen tomorrow, I'd love it.
All right.
But you know what I did, Basil, just for insurance, I got another spread, a 240, 232 spread, just in case this thing craps out tomorrow as well.
Right.
So I'm pretty safe as far as the stock being put to me. I'm just wondering
so
kind
let
of what
me just
you see in general.
Yeah, so let me do this. There's a trend line that comes in my weekly chart, and the trend line comes in at exactly by the end of the week, it comes in at 239.50. So that trend line goes all the way back. You remember, we spoke about this. I said this is something we short in my newsletter from 393, and think of it as 39 going down to 24. And I had no intention of covering it until we start to get to the 222 area. I don't know if I'm going to be able to do that, but that's my intention. That's my plan, and I'm trying to stick to it. So for me, this is kind of the H pattern that I was expecting. But I thought there was if that rally that we were looking at went a little higher, then you could have made another top towards 270 and then come down sharply. But this move says that there's just tremendous selling pressure in the IBB. So I'm just going to say to you, all I can say is that I've got a time sequence that says by tomorrow, it may Monday the latest, but by tomorrow, that 240.03 level is a possibility. And more than that, that's all I can say. That the 120-minute chart isn't showing much strength. It's starting to try to form strength, but very often they go for the next strike price, the big strike price, and that'll be 240. Hope that helps you.
It does, Basil. Thanks. Appreciate what you do. I've had your newsletter multiple times, and you're terrific.
Thank you very much. I appreciate that. Thanks, Kevin. Have a great weekend. And good luck on the trade. So, folks, just before we're about to wrap up, we've got a minute to go, and I had a bunch of questions about entry for AT&T. It's too late to enter right now. Wait for the pullback, Stan. Don't do it. Don't do it. The DAX, yes, the DAX pulled back sharply, but we're now a little independent of those markets, and I don't want to fight a trend. And the other thing was oil, crude oil. Let me just do this real quickly. So we are long an instrument that has gold and crude oil, and it's doing really well. Crude oil just broke out USO. This is a big move. Something is going on, and this is a big move in the commodities. So all I can say, the crude oil, the USO right now at 1049, up 30, has 997 as major support on the short term, but 960 is really the area to watch if it turns down. So, folks, I won't be here tomorrow. All I can say is good luck with the trading. Check out my newsletter, and also check out the webinar that I'm going to give at the end of the month, and watch this very closely. We're going to see what happens by the end of the day. And that VIX index did pull back pretty sharply to 14. Watching it, that's usually where they get.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.